we will have a very helpful tool, which you probably saw already a few times in slides before. And you were asking like, what the hell is that? But of course, we will dig into that later. For now, just understand that it can help, and definitely not only can, but will help us also to get more sight and clarity, and to also differentiate minor and medium inducements very easily. And as you can see, this cat right here definitely has definitely good sight and clarity right here. So it makes sense for us to use this box also to get more clarity about how to identify minor and medium inducements even easier. So if you check that on a chart, it would look something like this. So you see a lot of boxes, and already you would be like, what the hell is going on there? Like, why is that so important? What these boxes will do, obviously later, we will show you exactly what these meanings of these boxes are and how we use them. But for now, just understand that these boxes always mark us or give us the start of the day. So meaning this right here marks the start of the day. This right here marks another start of the day. This right here marks another start of the day. So is this, so is this. So we know exactly, okay, in the range of here to here, that is one day, right? So is the range of this until here, that is one day. Okay, so why is that so important to understand? Obviously, this box has multiple other reasons as well, but the first reason is to give us the markup and the understanding of where the days actually starts, right? So, and as we already learned before, minor inducements should induce something minor, and minor is considered being intraday also. Okay, so if you just, for example, look at this day in here, of course, in hindsight, we can see that this point is high gets induced to the high side, right? With breaker traders getting excited, continuation traders getting excited, but also this one getting induced to the low side. So we have obviously inducements to the both sides, just basing it on this box. So why is this so important though? And why will this make a huge difference? All right, later for the whole intraday guide, this will make a significant reason or a significant role of how to identify the cycle plays. But for now, we just say, okay, this is the start of the day. This obviously is inside this day. So this technically only induced intraday structure, right? Everything is which is inside here is obviously the intraday structure. And this point, for example, would be not in this day anymore. So if it induces this high in here, right, this, then it would be a medium, but it's not outside of this day, right? As you can see, this high is obviously inside this box, right, on this range. So this becomes minor. Same thing for this low, right? But guess what? The moment, this is the range, right? So obviously everything is inside here. So this right here is the structure inside, but guess what? It induced. So this is some sort of lows in here, equal lows in here, right? Perfect of of this one also, right? So of course, this one in here becomes some sort of medium already. Of course, this one would be the significant structure if it induces that. And as you can see at this scenario, it did not do it already, right? So at least you understand, okay, this structure is outside of this range, right? So, okay, makes sense to be not minor anymore. So with that understanding, let's see where the minor inducements are. As you can see, this day before, right? So what it induces here, just this structure here, that's obviously minor because it doesn't really have a significant role. It just induces some sort of equal highs in here. Everything inside here then is, of course, even like this would be just considered minor. Even this high right here, if it comes higher, would be still minor. Why? Because it's still inside the same day, right? But guess what? This inducement is obviously the inducement of this one, but this right here is to the left of the day. So this inducement to the low side is not minor anymore because it's outside, not intraday anymore. Okay, so let's walk it through actually. Next day, right? This is the day. this is the structure which is not inside of the day anymore, right? It's always to the left, so this becomes not minor. But what is the minor structure? Of course, this, right? Induced to the high side, and also this induced to the high side. Perfect. Same thing for this point in here. First, of course, it induced something to the left, but it's not minor. It's obviously medium, right? But this point makes a low. It's intraday, gets induced one more time. So this is just a minor inducement after a medium inducement. Okay. Same thing in here. All right. So technically now it's getting a little bit tricky. As we see, why is this point not marked a minor inducement as it just induced this high in here? If you look to the left, what else did it induce? Right, structure to the left first, forming this equal highs in here, right? And then barely just induce it to the high side, so that becomes not minor anymore, even if technically it induces structure to the left. Intraday, that's why you have to look to the left even more for not intraday plays, right? Bigger picture plays, and then obviously you can find the significance of that inducement. Then, of course, this one being a minor one, right? And then, of course, same thing for the equal highs, minor, equal lows, minor, because not induced anything to the left, not induced anything to the left, depending if you see this minor structure in here, but not really, right? Again, this is the buildup in here, the ranging, and that gets induced, right? And that technically the buildup already induced this minor structures in here. So that's completely fine if you mark it minor as well, right? Then, of course, this one, and hopefully you see the difference now, of, for example, this point, what did it do? That's intraday, right? That's not the same day anymore. Induces all, technically, yes, we had our equal highs with this baby inducement. For the bigger picture cycle, this could be seen as triple tops, right? And of course, this one got induced by the more significant structure. So guess what that is? You guessed it, we will dig into it in the next slide, right? But guess what? This one is minor. What's the difference? Because this is just the high of this box, perfect, gets induced to the high side, but did not induce the structure to the left. So this is minor, okay? Same thing here, induces the low, right? But not induces anything to the left. So this is minor, okay? Same thing here, induces, yes, this high of this box, but nothing to the left. So this is minor. So always use these boxes for orientation, or not even the boxes, but the boxes makes the day start, right? And then take the range of this day. If it's intraday, it's most likely minor, right? And obviously, if it's not intraday anymore, it becomes medium, right? So let's jump into the medium ones. So where's the medium ones on top of that? And now it should become a little bit more clearer, right? So everything which induces the structure to the left becomes medium. So first thing, obviously, a day starts here, right? This point induces the structure outside of the day, becomes medium, has a significant structure inducement, right? Obviously, this one, as you can see, induces something significant also, but it's equal highs, yes. But induces, why is there no immediate reaction? Because it's very late in the day, as you can see. We have to wait for the next day to get our significant inducements done, right? Where is it? Obviously, this induces something to the left, even comes low, right? Gives a significant reaction, gives some minor inducements, but then obviously comes lower one more time, then induces kind of the inducement in this scenario, not a problem. Of course, all very reasonable later on, so don't get confused by it by now. Just understand the inducement types, right? So of course, this one, we spoke earlier, equal highs, structure to the left, induces it to the peak, right? A little bit just, but classifies as medium inducement. Then of course, this one, this wick in here, induced it just a little bit, given reaction wasn't enough already, comes back and induces it one more time, and then gives the reaction from here on, okay? So that's when the liquidity grab, it wasn't big enough, then sometimes, of course, they can come back. So then, of course, you have our build-up intraday internally, right? Because our range of this box is in here, so it's internal inducement. Then, of course, induces something to the left, outside of this day, becomes medium. Look at the significance of this inducement, very big, obviously. Then we have a minor inducement after that, So that's obviously our Mona Lisa scenarios where we have a medium inducement and then internally minor inducements. And then of course you can see how beautiful these reactions are. And then you can trade these order flows later. And that's like classified a Mona Lisa trade also. And for multiple reasons, which we will dig into it also, but just understand medium inducement, minor inducement, and then another minor inducement internal intraday into a mitigation of obviously the previous day, right? So that's really nice. Trading away from the medium one, away from a minor one, and then having a minor one which mitigates this area later. This is absolutely Mona Lisa shit, and we will obviously show you exactly very later how to use that. But for now, understand again these inducement types. Then a target, of course, if you have inducements like medium, minor, should be again what? Liquidity, building up these equal lows, right? Never induced it here, builds equal lows. And of course, you should target the liquidity at least for these equal lows, which it did. Then of course becomes medium in here, but of course you have to look to the left if there's more liquidity zones. Yes, you'd have this one more, and then this one, of course, why is it not a medium one? If you look in hindsight already in here, you probably guessed what that is, right? So guess what? First, obviously, medium one, another medium one. This medium one gives us just a baby reaction, right? And then the next day happens. So that's again why we always wait for the day. Absolutely Mona Lisa shit, right? Induces high first internally, right? Intraday, then huge ass reaction. And guess what this will become, right? So we will reveal it in the next slides, but just the next day, right? This also, look at it, perfect stuff. Range intraday, right? Induces this baby, minor inducements in here, medium inducement to the left, and that's why obviously it pushes higher, gives first like another medium inducement. That's where you're getting trapped a little bit into the medium inducements. That's when you look at the next major, right? And of course, now I said it already. So let's look at the next one. Where's the major inducement? And of course, it is this major structure point to the left, which got induced. How does it happen? With insane speed, huge vector candle to the downside, gets every breakout trader, trend trader, like momentum trader, everything crazily excited, right? And of course, we trade away from that then. So we had the same scenarios that we had in here. Medium one, minor, obviously scenario to trade in here, scenario to trade in here. Now we have the same stuff, right? Obviously, this is the major one. This is a medium one, so potentially we can trade away from that, or we wait for another inducements here and trade into in here. And then for the high side, even more, something like this is how we will do it later. But first, we have to understand of how to identify the structure points, right? And utilize it for also days, intradays, right? And then obviously identify of how significant is inducement is. Is it the minor one? Is it the medium one? Or is it maybe even a major one, and how to trade away from them properly. So we have, of course, more examples. Next one in line is our legend green wizard, Cameron. So Cameron, up to you for another more fancy examples.
All right, so first we're going to show the M5 of AUD/USD on the 1st of June. It's just going to be our minor inducements, but we're not going to include that special box. And we're going to do this to show you how difficult it is to identify whether it's current day structure, whether it's a minor inducement, whether it's a medium inducement. So without this special box, it becomes a little bit difficult. You know, is this the current day? Is this the previous day? And so this becomes more and more difficult, but we can sort of make it out. So here we've obviously got a minor inducement. This one is very obvious minor inducement, and they'll do these little ones all the time to just continue higher. So here again, we're not sure because we don't have our box, so it becomes a little bit tricky knowing whether this is medium, whether this is minor. Again here, another little one to continue higher. This probably induced something on the left, so medium, but again, without the box, it becomes difficult. And then we can see we came up here with lots of momentum, lots of speed, tricking everyone into the buys. And then what do? Crash back down, taking all of these points, minor, minor, and minor. Again, notice the momentum, notice how we induce something, we get a pullback, but we still have liquidity lower. So we come and collect that. We're getting towards the end of the day. So we see price begin to stall around a little bit, and we don't expect anything huge from this inducement right here. So now let's do the same, but let's do it with the box. So look how easy this becomes. This is the start of our day. So we know that anything from this point onwards, if we induce it, it's just going to be a minor inducement. So first, we induce the top of the box. We'll get into that. This is something very specific, but we'll get into that. Next, we have a little minor inducement where first we build our equal lows, give the reaction, fake it, allow people to get in, allow people time to enter, and then we induce it and continue in the direction. Again, look at the speed of this inducement, lots of momentum. So once we break this high, this is triggering in people's buy stops, or, they're looking to enter around here, and this momentum tricks people in. And then again, pull back after we induce high, continue lower, minor inducement of this. People think, okay, structure has changed bearish, so now they're going to be looking to sell from here. And look what we do. Channel upwards into vector candles into the inducement. It's very late in the day, so we don't expect much for price action, and then price action continues to stall. So let's go for the next one. Let me delete that. Hey, again, we've got our Asia range, so we know what to expect. First, we build the double bottom, induce that, push down, and now we have this double top built here. So this becomes our target. Look at the speed at which we take that out, come up, take that out, give us a pullback before inducing again. And then we come down, look at the speed again, look at the speed of our inducement, induce this point. So now people are looking for sells. Where are they going to be looking for sells from? Here. So we do our build up, and then again, we push higher, inducing this and this with, again, lots of momentum, tricking people. So now we can continue to sell down, and we're getting towards the end of the day. So price will begin to stall. This is actually something that we will look into later. There's a reason for this. Okay, next one, we're going to go over some medium inducements. So again, this is one day, and then so from here to here is one day, and then from here to here is another day. So these points here, here, and here are all from the previous day's structure. Also notice how we build equal lows at these points and equal highs at these points, and equal lows at these points. I haven't drawn that very well, but equal lows at these points. So again, what do we see? Big momentum, huge momentum with the inducement, tricking people into, okay, maybe this resistance is going to turn into support, taking people in through their buy stops, and also tricking people who are maybe going to buy at this level here. So again, price continues down. We give our medium inducement right here. We give a reaction, but what do we have lower? We have liquidity lower. So we know that this reaction is likely not going to sustain. It's going to be a false reaction for us to overall continue lower. Again, we're dragging people into sells and also taking them out of any buys any buy limits that they're looking to play. All right, so let's look at a bit of a bigger example. First things first, as you can see, we've divided the days with our box. So all of these are separate days, like so. So where are our medium inducements? Well, we know that medium inducement, where are minor inducements? Sorry, we know that minor inducements are of same day structure. So if I just put them on screen, There you go. All of these minor inducements make sense. Again, that's a current day structure. Current day structure, but look, we only get a pullback. Why? Because we've got liquidity lower. Again, look at the way that we induce this. Lots of momentum, lovely. We like to trick people early on, trick them into the wrong direction. Same here. Minor inducement. Minor inducement. And again, look at the momentum. Look at the way that we induce it. Same here. Same day structure. So this is a minor inducement. But again, look at the momentum, and then we trade away from it. Okay, coming into this day, we give a little minor inducement, again with momentum, pull back into another minor inducement before taking out this double top, and then continuing down for the rest of the day. Same here, this one's a bit of a nicer one, because look what we do. We build the 1, 2, 3, 4, the quadruple bottom, induce it. Again, we get these little minor inducements here and this minor inducement in Asia. Again, look at the momentum, tricks people into going the wrong way. And then after we induce this quadruple bottom, we continue upwards. Same here, we built a triple bottom, induce it, lots of momentum, and then we come up, induce high, again with lots of momentum, before inducing low and continuing higher overall. And then again, little minor inducements, even with news, they use news to induce before continuing in the intended direction. So those are all of our minor inducements. Let's go into our medium inducements. Okay, so where would our medium inducements be? Well, we know that medium inducements have to be from the previous day or more. They can't be current days. And this is where these boxes really begin to help us, because they begin to help us identify our medium inducements. So let's bring them up. Okay, so yes, this was a minor inducement, but it was also a medium inducement. This is previous day structure. And again, look, we can see how they induce it with lots of momentum before continuing in the opposite direction. And then the same here, medium inducement, but we also build equal highs for our minor inducement. So we have medium into minor, into continuing the other way. And then look at all of this momentum down here, here, and here, pushing down into inducing this low here. And this is our medium inducement. Again, we build the 1, 2, 3, 4 quadruple bottom, induce low before continuing higher. Right, so here we can see the momentum very clearly, medium inducement, but what do we have? We have liquidity higher. So this only gives a pullback until we have minor inducement into continuation higher. And these will line up with other things and other confluences, so you'll know how to trade these. Again, channeling into little minor inducement, into medium inducement, all of this momentum tricking everyone into thinking it's going to continue higher, buys, and then in Asia we have another little inducement before continuing in the intended direction and giving these medium inducement here. But you can see what they're doing, just building liquidity, and they're giving a false reaction away. And then to end the week we have this, and we just consolidate a bit after our minor inducement. Okay, so we're still missing one though. And what are we missing? Well, we're missing the major inducement. Where do you think the major inducement would be? It's going to be the most significant inducement. So obviously our major inducement is this point here. This entire thing was just like a build-up, and you can see we then vector out of that build-up, take this high and that with lots of momentum again, and then continue in the intended direction. Now I'm going to give it over to the Queen, Sakbar, for her part, and she'll go over again some of the variations of the inducements. And yeah, that will be my part done.
So I will be covering a few examples on the minor and medium inducement types, and the charts I will be using are all 5M charts, And of course, they will be covering the entire day as well as the previous day, depending on if it's relevant, of course. And that's how we understand our various inducement types. Let's try to identify our inducement types. So we have a plain chart. It's a little bit tricky to identify the inducements, particularly the minor inducements, I would say, because they appear more often than medium ones. So if we now add our orientation, we can see the blue lines over here are all of our minor inducements, and the purple lines are our medium inducements. So we're going to start off more in the beginning of the day over here to see how price continuously induces up and down. So from here, what we have is our liquidity. So we see these equal lows right here. And we also have these equal highs, which I did forget to actually mark with a blue line. So we have two sets of liquidity. And what happens? We get an inducement high over here. Right, so we still have our low that needs to be taken out. However, upon that, we also have, again, the same thing. Highs as well as lows. And we get an inducement high. Now what happens is price takes out both these liquidity points. So it induces in one impulse both minor inducements. Now that's particularly important to understand that you don't always get an inducement of one area. So you get two inducements here, two sets of liquidity or structures, whatever it be of the inducement, you get two. So you have your inducement low now. Again, continuously the same thing happens. We have again a structure this time, right? A high, you could say, of internal structures that needs to be induced. We already have the inducement here that takes out everything before. So our only remaining objective is this point right here. Upon that, again, we get this fractal liquidity right there. Again, forgot to mark that. And then we also have the same thing, the lows here, these equal lows. Exactly the same thing. Inducement high takes out this structure as well as the fractal liquidity, and then continues lower. Now, as it continues lower, it's exactly the same thing as what we had in this cycle over here. We take out 2 points. That's the low as well as this structural low right there. Now, it's important to understand and to take note of the fact in our purple box, the high and the low are considered minor inducements. They're always the minor inducement point. So this point here, as well as, of course, this point there. So we've now taken out 2 points of liquidity. What does that mean? Essentially, the only liquidity we have to the left is this structure point here. Now, remember, this is the previous day. So what that means, it's a medium inducement. So now we continue to induce, take out this medium inducement right here. And now this is because it's our main inducement, we now continue higher with force, with the vectors. You can see all these vectors right here with force continuing higher. We didn't get the high taken out here. So now we have the minor inducement as well as the medium inducement again, the previous day high this time. And then of course we continue to other greater levels. So we're getting in this scenario a minor and medium inducement in one impulse. Now upon that we get these pullback type of things, and this is where you get a lot of inducements of structure. So we get our inducement high, we get this pullback type of thing, and then price of course induces this high right here. So that's taken out now, cross that one off, inducement high, coming lower, induce this structure, inducement low, and then we continue higher again, taking out this, again being another minor inducement, and then of course this point here is an inducement to the left. Now it's also a medium inducement. It's important to understand you can still get 2 or 3 or whatever it be medium inducements in one impulse. It's not necessarily a major inducement just because we've had this one impulse from here to there. What this could look like in a example is like this. So we have our impulses to the left. You have your major inducement of the higher and a higher time frame, which is this area. And in this scenario, this is our first medium inducement, and then the second one will look like that. So it's just another high to the left, nothing crazily significant that it can be marked up as a major inducement. So upon that, what we have exactly the same thing. We've had our inducement high, we get our reaction bearish, and then of course we have structures in between, and price has to induce one last time only to then continue lower. Now as it continues lower to induce, this point here, remember, is a minor inducement. It may look, you could say, significant, but remember, it's important to understand it's the same day price action. Hence, it's a minor inducement and not a major one. Now, that could also act as your main inducement, and you may, of course, get the reversal from there. So, with that being said, we have another example. So, again, plain chart, looks a little bit tricky to understand this, but we will add our inducement lines. Now, in this scenario, we have more so minor inducements. We only have one major one here. But if we start from the beginning, what we have, of course, we can mark up the lows and the highs. We know those are minor inducements, hence the blue lines on those. What we have here is the inducement of structure of this point right there. And then, of course, we even have, fractal lows again. Again, structure over here gets induced with equal highs. We induce low now, take out the lows, take out the structure, continue, have our medium inducement of this structure to the left, which is the previous day, hence it can be a medium inducement, perfect inducement, again, with our gray box magically telling us to buy. And then, of course, we get our continuation and the nice vector candles to continue. Again, in between all of that, we get equal highs. So we get our inducement high, taking up this structure to the left now. We get our reaction. Again, we have another point of structure. Equal highs, comes to induce one last time, continues higher, takes out the highs, and again continues higher, takes out the high over here to the left. So it's a continuous cycle of minor inducements of the high and the low side. And as we continue higher, you get a very slight inducement. It's still an inducement, it's just very slight. Again, price continues to reverse, takes out the structure here to the left, continues higher. Again, now we have a new structural point here. We come back, continues. Now we have equal highs at that point. And again, price comes lower to take out these 3 points of structure. This one being essentially the significant point, hence why price induces here for the last time and then continues a lot higher to take out the equal highs. Now remember, all of that was internal liquidity, hence minor inducements only. Now it can only be medium if we look to the left, and essentially it's a significant point of structure like such. Over here you have structural points. Usually if it's liquidity, it's more so a minor inducement as they appear more so on the lower time frames. However, that being said, you do also get, of course, liquidity built up on a higher time frame and then a major inducement. And then you start to get, of course, your minor inducement plays to form these structures of a continuation. So in this scenario, of course, the main inducement was low. Then we get our continuation and we continue to induce upon inducements. So with that being said, let's look at another example. Plain chart. Again, these are all very different examples when it comes to the liquidity. So you can see typical liquidity such as support, resistance, or equal highs, equal lows, but you also see structure, and that's usually one that not many people figure out much. And with inducement trading, it is a key one, I would say. So looking at this, again, I've incorporated the previous day price action as well as it's relevant to, of course, our purple box over here. So let's add orientation lines. And in this one, we have several main inducements, such as medium inducements. And what we have, if we look to the left, we can just analyze a bit of the previous day. So price induces low. What does it induce? This does not sustain. Then what happens? We continue higher. Again, you continuously take out these structures. Now, of course, that being said, we also get the same thing occur. We get this reaction. Okay, price is doing what? At this point, you have equal highs. Then, of course, equal lows, right? So you have equal lows. Price induces low one last time, right? Then you're getting all of this crazy little liquidity points. Again, that's your spread type of wick. That's not so important. Nevertheless, it just has to induce one last time of this structure perfectly. Then that consolidation type of play or equal highs, equal lows, it induces low first, only to then induce high. Now, both of these did form the high and the low of this box. Hence, those are also points that will be induced via a minor inducement. That's important to understand too. Then, of course, price creates a low, only to then take out this minor inducement that we have here that created that high, also inducing a medium one over here, right? Because that's the previous day. Now that's important to understand, even though it's very close proximity. It's only, well, that close. It's not about the range, it's more about what does it induce, even if it's a few pips. So that's a minor, a medium inducement. And that of course gears us up for price to then continue bearish, take out this structure point as well as the low. So it induces two minor inducement points